The mainstream media is becoming super bearish on the housing market. As you can see here, everyone is having conservative predictions regarding 2024. Will UK house prices and interest rates rise or fall in 2024? We know for a fact that interest rates will likely hold due to our analysis of previous videos. Normally, when this kind of thing happens, it's a time, to start looking at the market slightly differently. I know we've been quite bearish recently, and it will still take some more convincing from the charts to switch my stance. However, when you see it in the mainstream media and everyone's talking about it, money can be made from this point onwards. So let's look at some recent sold prices in central London, and this is of course on Rightmove. So this property here, they made about £71,000 in profit, but that was only in 8 years. Let me take a quick look at the property. Sure, it's nothing special, but nevertheless, for a property in central London, you can't exactly complain. And it's in Pimlico as well. It's not exactly a bad location, and that will fetch a higher price due to the postcode. There are a few properties which stand out, in particular this one. In a 7-year period, they lost 8%. Bearing in mind property prices rise between 5 to 10% annually. This property lost 8% for what they paid for it over a 7-year period. I haven't got the pictures. However, they have refurbished this property because I saw this on another website from Property Data. Now, say what you want about the decorations and the refurbishment. Some people might find it tacky, but nevertheless, they renovated this entire property and still lost 8% of what they paid for it. So the likely cost is much higher than 8%, 10, 15, maybe even 20%, depending, on what they actually paid for it all. And this was Kensington. No, Westminster this was. So it's not exactly a location it expects to happen in. This property here is another one, just south of the river in Lambeth, and they lost 5% over a 10-year period. Again, it's not exactly a palace. Nevertheless, it's in a reasonable condition. It has been, I imagine it has been renovated since purchasing the property. We'll do one more that I noticed, and this is just on the first page of Rightmove as well. It's not exactly like we've been searching for a long time. Not a bad location. This one has recently been refurbished as well, and they've got bifolding doors, and they're grey as well. So grey is basically twice as expensive as your standard PVC ones. Now, a used kitchen, not a bespoke kitchen or nothing. Nevertheless, it's relatively new. You've got a roof full of solar panels. Nice bathroom. You've got a Tesla Powerwall. That in itself is at least £8,000 to £10,000 with installation, not including the solar panels. They've had work done here, which would have required probably a structural engineer, so they can get this corner taken away. And it's done up relatively nice. The only bad thing I'll say about this property is this room. They must have got a shoddy contractor to do the loft conversion, because I don't know why this radiator is so low to the floor. You can see this like wall junction or whatever it is. That could have been easily covered by a radiator cover. Anyway, let's go over to the charts, shall we? So since the last video, we briefly spoke about this being a key level for the S&P 500, which it has blasted through. It's a very parabolic and aggressive move. You don't want to try and short these markets. The Dow Transportation Index again found support. It continues to rally higher. High yield junk raised into another resistance level. Looks like a Wyckoff accumulation period. You got IWN, the Russell 2000. You've got home builders in America blasting to all-time highs of home builder ETFs. And Savills stock is actually looking good. So you might notice these green arrows. So a signal occurred. So every time this has happened, house prices have increased. Apart from these two, obviously, these two. What I'll do, I'll put up a picture here describing the increase in house prices on every single one of these marks. And this doesn't happen often. Since 1999 has happened, 10 times? 75% chance of house prices increasing. However, if we compare these two to these two indicators, it is probably the ones that are closest. if we put the Fed funding rate on top of this chart, by the time these had triggered, the Federal Reserve was still cutting rates due to the decline in the economy, whereas all the other ones, all the other indicators, interest rates had already been lowered to reasonable levels to stimulate the economy again, or was in the hiking cycle, thus saw returns. So you see here, this isn't in any hiking cycle, nor this one at the start of the hiking cycle. This interest rates had been lowered, which was the COVID pandemic boom. And again, this one in the hiking cycle. So we should see, house prices increase after seeing the signal. I have it again. Although I would like confirmation and to see a resistance level taken out, which we have done in the smaller time frames. We spoke about this the other week, having a small time frame reversal in here in this level. So when you take out these highs, these pullbacks have higher probability of being bought up and continuing to rally. So if you zoom in real close, you can see this is the point where you probably would have got into this trade. And I know buying housing is different to stock. However, the stable stock was up 11%. And this indicator should be taken seriously, purely because it happens so little and it has a higher probability of carrying out. If we continue to take out these levels, we've taken out this previous high, so the trend has effectively changed. So dependent on how this move upwards react, to see if it's an impulsive move or a corrective move, we need to have a little bit more information. If we compare the current real estate cycle to the one previously, such as this one here, and we project this forward to match it to today, we could get something like this. So this is this move projected out to here. And what I've done as well was add when the Federal Reserve pulls rates. You can see from that point onwards, stable stock was near the low, and when it pulls, it had a reversal and went upwards towards the highs. So this purple box here as well, which coincides with this projection, and you can see it's quite accurate, very similar to the 2006-2007 period. This is actually a gap which I hadn't noticed before, and these gaps have higher probabilities of being filled. And if we continue rallying and we protect these lows, house prices could see the final 2-year parabolic move that we typically see in a real estate cycle. And if you look at these peaks, the time frame you will notice for the exact peak is June 2026, and that is when, if you project forward from the 2007 peak, you would get 18.6 years after the previous peak. So that's quite interesting, never to say the less. And after if that did play out, you would see a catastrophic crash / recession, worse than anything we've ever had before. That's some positive indicators, and it's a great time considering everyone's gone bearish. Nevertheless, I would like to see further confirmation and see how this move reacts, how it reacts to these key levels and support levels. If we go to some of the home builders in the UK as well, we can see there's a massive resistance level through here. And then, again, I use this same indicator on home builders. It's a phenomenal indicator. So this is the level I'm watching out for. And if we see impulsive move down, then obviously I have to change my stance and continue to be bearish. Nevertheless, if this is an impulsive move upwards and other stocks continue to do the same, depending on how price reacts to these levels, if it breaks above and we have an impulsive move using things like Elliott's Wave theory, then probability would favor that 2025 to 2026 period could actually manifest. Do I think it's likely? No, because how deep we are in a real estate cycle. Of course, you can still make money through the housing stocks. Every time we see this indicator, we rally higher, as you can see from these red lines. And of course, they're not exact bottoms, nevertheless, not bad. We could potentially postpone the crash by a couple of years, which would do many people that are aware of the crash a greater good, purely because they'll be able to exit the markets or sell certain investments which they're over leveraged on. Again, it's another stock. Not bad indicator at all.